Hey guys, welcome back to Cash Flow Confidence. In today's episode, I want to talk about what to do when you have found yourself in a cash crunch. So, what I mean by cash crunch is you look at your bank account, you look at what's expected to come in, and you look at what's expected to go out, and you're like, oh my God, how did this happen? I'm sure this is a sensation that all of us watching are familiar with. But I want to talk about what to do if you have found yourself in that situation. And then I want to spend some time talking about what to do to prevent yourself from being in the situation again. So let's say, you've looked at your bank account and you're like, I've got payroll and all these other bills, like what am I going to do? The first thing you're going to do is pull your outstanding invoices or your accounts receivable report and get on the phone. So I don't mean, emailing people to remind them that such and such is late or, let's just, invoice them again and see. I mean, like get on the phone today and start calling people and chasing up payment. That's a way to quickly get cash coming into the door. So let's say you're like, well, Shelby, I don't have an outstanding accounts receivable. Like I have a retail store or we don't send invoices. People just pay us, immediately or due on sale. Let's say you have a retail store. So like you carry inventory. What you're going to do if you are facing cash problems is now is the time to start rolling out discounts or, those things that you really have a hard time getting off the shelf. It's time to bundle those and see just how you can get them out the door. This is also the time that you're not going to want to restock on inventory until you get some things off the shelves. One of the things with my retail clients that I track is days inventory outstanding. This tells us on average how many days that inventory is sitting on your shelf before it leaves. Depending on the nature of your business, I have clients that some of it's very cyclical, so I expect a higher days inventory outstanding during some parts of the year. But on average, you don't want that to get above 30 and you definitely don't want it to get above 60. You don't want that stock and that inventory sitting on your shelves for too long because it's eating up your cash. So if that is the case, then what you want to do is, like I said, start bundling things or offering discounts to get something off the shelf. And I know no business owner likes the term discount, okay? But think about it as 50% of something is a lot better than 100% of nothing, right? And so beyond that, something you might want to think about if you are in the inventory or retail space is some kind of like monthly subscription that you could offer. For an example, Fabletics, the clothing company, they offer actually, I think they require a subscription base. So I think you pay like 60 bucks a month in a monthly subscription, and that's a credit towards a clothing item. It's something to consider. It might not work for your business, but you could do something like that where, you incentivize for a monthly subscription. Doesn't have to be $60 either. And maybe somebody gets, entered into a drawing or they get like special pricing on some of your items. I have a client who owns a wine cellar and they do this. And so if you are part of their monthly subscription, you get special pricing when it comes to like higher end wines. And then you also get entered to win a bottle of wine every so often. So something to think about. Beyond chasing down outstanding receivables and getting inventory off the shelves, if neither of those applies to you, or let's say you've done those things and cash still is not coming in, now's the time when you're going to look at all of your obligations, like debt payments, subscriptions, things like that, and say, okay, what can I renegotiate for this month, or what can I pause without hindering operations? Because let me tell you, if you're in a cash flow crunch, the number one thing you are not going to want to do is miss payroll. Don't do that. By any means, make your payroll, okay? But let's say you have debt payments or, software subscriptions, things that you could be okay pausing for a month or two while you hang on to your cash. And debt payments, call your bank or your lender and ask for an extension or something like that. It's not going to be the end of the world. You got to do what you got to do sometimes to make payroll. So if you have found yourself in a cash flow crunch, then just to reiterate, the first thing you're going to want to do is follow up on your accounts receivable, get those invoices collected. The next thing is get inventory off the shelf. Sell, sell, sell. Offer discounts, offer bundles, offer a subscription. And then the final thing is pause what you can and extend what you can. Talk to your lenders, explain your situation, especially if you are in a very cyclical kind of work. I have a client that their peak months are in the summertime. So right now it's winter. So what we did was we called all of their lenders and said, hey, like here's kind of how our revenue patterns work. Can you work with us to kind of support that? And they did. So do that. So let's say you want to prevent this from ever happening again. The first thing I want you to do is produce some kind of cash flow forecast for yourself. Not a revenue forecast, but I mean a cash forecast that kind of shows, when do I expect certain customers to pay? Write that down. When do I need to make my own debt payments and payroll and things like that? Write that down as well. This does not have to be fancy or complicated in some big Excel spreadsheet. Do it on a napkin if you have to. But track the timing of when your clients are paying, track your own debt payments, track how long, certain inventory items sit on the shelf. If you have like something to work with that forecasts it a little bit, you're already way ahead of the game. The next thing is if you have a line of credit, make sure that you are using it strategically. So I don't mean like, oh, I want to give myself a raise, so I'm going to take out more on a lot of credit. Don't do that. I mean, if you know that certain months are going to be slower or certain weeks, have that line of credit available there to see you through, and then afterwards make a plan to get it paid back down. If you don't have a line of credit already, I would suggest getting one because it's not like a loan where once you get it, it's a sudden influx of cash and now you've got to start making payments. A line of credit you can apply for and just have and not even use until you need it. But once you do need it, there it is. And the final thing to prevent yourself from entering into a cash crunch is to review your customer terms. So if you are offering, net 15, net 30 on your customer terms, but let's say your vendors don't have you on terms, like it's due immediately, that's not good because now you're basically acting as the bank for your customers. Instead, what you want to be at is a place where whatever you sell is due on sale, but yet you have terms with your vendors. So now you're receiving cash from your customers, but that cash isn't due to your vendors for like 30 days, say. That's called a cash float, and that's what funds your business. That's what creates, free cash flow. Now, let's say, you do have your customers on terms, but your billing is kind of like, I'm going to bill 50% up front, and then whenever X job is completed, I'm going to collect the rest. I don't recommend this. I know certain industries, this is kind of a requirement, but I recommend if you're able to milestone billing if you're in a project line of work. So, for example, 50% due up front and then the remaining due over, X amount of months, say, or, 25% over 4 months, some kind of regular milestone. The reason for this is because if you're in a project-based line of work and you bill 50% up front, but you have to kind of like communicate with the client on their input to get the rest of that work done. If I'm the client, you're kind of incentivizing me to be like, well, I know that as soon as I respond back to them, I'm going to get a bill. So I'm just going to keep putting them off. That's what's going to happen. So milestone billing as opposed to percent of completion. Like I said, I know it's going to be industries, dependent. And the final thing is to prevent yourself from entering into a cash crunch is I want you to figure out what it costs for your business to operate. So payroll and all of your expenses out the door. I want you to figure out what that monthly cost is. And I want you to make it your new standard that you will have at least 3 months of that operating cost in the bank. And so if you don't have that already, that is your goal, is to right now figure out what it costs to run your business each month and then figure out what that is for 3 months of expenses and aim towards building up that cash reserve. After that, that's when you can focus on true growth and, taking risks and things like that once you do have that cash reserve. And so if you do those things that I just mentioned, it's very unlikely that you will find yourself in a cash crunch position again, but as always, if you need help with any of this, especially the forecasting piece, that's what I do. So please reach out to me. My email and my contact is in the show notes. See you next week.